No.
Yes.
It is
So
listed company.
yes, exempt income. One of them is income of
Listed
a listed institution. So
Mm.
when you talk about a listed
Mm.
institution is that institution which is listed under the first schedule of the Income Tax Act.
Mm.
So there are several institutions which are under the first schedule of the Income Tax Act. Every year, Parliament reviews that schedule and updates it. Even in the current bill, which the President signed recently, there is an amendment. There are other institutions they have added on. But the common ones I can go through for you here, we have African Development Bank, African Development Fund, African Trade Insurance Agency, Aga Khan Foundation, Australian Development Agency, Belgian Technical Corporation, Danish International Development Agency, Department of International Development, TAXATION for International ZUSMA, that is for. Then we have East African Development Bank, we have Eastern and Southern African Trade and Development Bank, European Development Fund, European Investment Bank, European Union, Food and Agriculture Organization, French Development Agency, Global Fund for AIDS, Malaria and Tuberculosis, Iceland International Development Agency, International Bank for Reconstruction and Development, International Center for Research in Agroforestry, International Civil Aviation Organization, International Development Association, International Finance Corporation, International Labour Organization, International Monetary Fund, International Potato Center, International Telecommunication Union, Islamic Development Bank, Japan International Cooperation Agency, Korea International Cooperation Agency, Kuwait Salt Fire Weedfield, Norwegian Agency for Development Cooperation, Swedish International Development Agency, and then United States related agents and specialized agencies. That is as at 20 that is as at 2021 amendments. But regarding the 2021-2022 amendments, it is not yet gazetted, although the president has signed. So I will inform you that if it will be subjected to examination, apparently I am sure what the CPA is preparing is as of that date, 2020, financial year 2020-2021. Financial year 2021-2022 is likely to be tested in the subsequent year period, that is next year. Yeah. So income of a listed institution is exempt from tax. Then we have income of an organization which is entitled to privileges under the Diplomatic Privileges Act. Then we have the official employment income derived by a person in public service of the government of a foreign country. Yes, Martin, you're welcome.
Thank you, Stephen.
Yes, good evening, Martin.
Good evening. How are you?
Hey, it has been a while.
Yeah, today I said I should join the class and.
Yes, this is good. This is good. You meet David is one of our pioneer students. He was studying with us financial accounting.
Yes.
Now he's progressing to level 2.
Oh, that's good.
Amidst the COVID restrictions.
Yeah, that's good.
So David Martin is one of our tutors.
Okay.
Yes, he's one of our tutors. Martin, I don't know how your schedule is.
Let's talk about it after this class.
Because David is one of the students who wants to study QT. if I'm not mistaken. Is that true, David?
Very true.
Yes. So we shall discuss with Martin. Then hope we shall make arrangements.
Okay.
Okay.
Yeah. And given that David is an essential worker, not so David.
It's very true.
Yeah. So we shall only arrange the transport for Martin.
Yeah, true.
That is if you must meet physically. Yeah. Okay. Let's continue. We shall discuss that later.
All right.
Yeah.
So I was saying, the official employment income derived by a person in public service of the government of a foreign country. Now, these are usually ambassadors. This person could be a non-resident, or he's a resident just for performing certain services in Uganda. And then the income is payable from public funds of that country, which is taxed in that country. So URA will need to confirm whether this foreign national, the income is being taxed in their country. So in that respect, that same income will be exempt in Uganda because of double taxation arrangements. So a single source income is not supposed to be taxed twice. Then, if there is any Ugandan who's working on a foreign mission, so the allowance payable to that Ugandan who's working on a foreign mission outside Uganda is also exempt from tax. Income, then we have income of any local authority. Then we have income of an exempt organization.
What is this? What is this local authority?
Local authority, you are looking at the local government authorities. Yes, it could be KCC. Yes, those are.
So many they don't pay taxes.
Yes, their income is exempt from tax. Those are local authorities. Indeed, they are government authorities. They are referring to government authorities, not necessarily any other local authority. Yes. Then we are also saying income of an exempt organization. Do you remember the meaning of exempt organization? Did we go through together last week?
Yes, I remember. Any company which is not pay taxes. Say the any company which is not allowed to pay taxes. Also.
Yeah, but we had a broader understanding of it beyond that. When we were defining it. Did you write something about it?
But my book is not here. It's in the office.
Hey, you
try to go through them.
Oh, I understand. So we say the exempt organization. First of all, we were looking at what is concluded to be an exempt organization as per the what? Income Tax Act. Are you with me?
Yes, yes, I'm on.
Yes, we said it could be any company or institution which is an amateur sporting association. That was our first point. Amateur sporting association. You remember something like that? So an exempt organization means any company or institution which is amateur sporting association, which is also a religious, charitable, or educational institution of a public character, or a trade union, employees association, an association of employers registered under any law of Uganda, or an association established for the purpose of promoting farming, mining, tourism, manufacturing, or commerce and industry in Uganda. And then lastly, we said it could be a body established by law for the purpose of regulating the conduct of professionals. So an exempt organization could be given a specific exemption certificate from URA. Even if you have all these qualities, but you have not applied for the exemption, you are not yet an exempt organization. So when we are looking at the exempt organization for purposes of the exam preparation, our test will be, is it an amateur sporting association? Is it a religious, charitable, or educational institution?
Trade unions.
Yes?
Yes.
You were saying something.
Yeah. No, that's affirming the point.
Oh, all right. We could also we could also understand what charitable would mean in more detail. What happened is that the commissioner sometimes used to issue what we call practice notes to interpret the laws which have been passed by Parliament. But of late, they no longer issue practice notes. What I've observed, they are issuing circulars. They just they post a circular on their URA portal, or they put in newspapers, or they send to taxpayers. So they are coming in to substitute a practice note. So there was a practice note which was issued to expound on the definition of an exempt organization. Because people would not understand what charitable is. So the commissioner emphasized charitable would be an organization which must be proved, first of all, to provide services for public benefit, which falling under either the relief of poverty, the advancement of education, the advancement of religion, or for other purposes which are beneficial to the community within the legal understanding of charity. Yeah. So that is what the commissioner was emphasizing. Is it for the relief of poverty? Is it for advancement of education or advancement of religion? So when we start looking at the activities or the examples, we shall be testing for that in order to conclude whether that institution is charity or not.
Okay.
Yeah. Next is are you with me?
Yes, I'm on.
Yeah, any educational grant which the commissioner is satisfied has been made bona fide to enable or assist the recipient to study at a recognized educational or research institution. So this grant will not again be taxed. It will rather be exempt from tax.
Okay.
Because it is in the subject of the matter, or the substance of the matter is that it is intended to advance one's education. Then we also have an amount derived by way of alimony or allowance under any judicial order or written agreement of separation. Yeah, if there is usually an alimony is a payment in court for married couples when they are maybe separating. So there could be a payment agreed upon by the legal team in the courts of law for that person to make a periodic payment. So what the law is saying is that that payment, the recipient of that money should not be taxed. So that money, as by way of argument, that allowance is not going to be subjected to tax, provided it is as a result of written agreement of separation. Then the value of any property acquired by gift, bequest, or inheritance that is not included in business, employment, or property income. Now, last week we looked at gross income, not so? And we said gross income is the sum of business income, employment income, and property income.
Yes.
And then we say that we also looked at residence status of taxable persons. And we said a resident individual will be taxed on incomes from all the geographical sources. That means income from all world over, whether you have property in Uganda, Kenya, like that, businesses in Uganda, and you have other sources outside Uganda, all that income would be subjected to tax in Uganda.
Yes.
Now here what we are saying is that if you have income in your financials, and that income you have is not categorized as business income, and is also not categorized as employment income, and it is also not categorized as property income, then definitely it would be exempt income.
Okay.
That is the emphasis. Like for income tax purposes, we are going to be taxing chargeable income. And we said chargeable income is gross income less allowable deductions. Now, if the income we have does not fall under gross income, then it is definitely exempt income. Okay. So we also have any capital gain that is not included in the business income, other than capital gains on the sale of shares in a private limited liability company or on the sale of a commercial building. So what is going to happen here is that if you dispose of an asset, which is a depreciable asset. Last week we looked at a business asset. Do you know the definition of a business asset? Did you make some revision?
No, I remember it being an asset held by the entity.
Yeah, it is an asset used or held for use. Used or held ready for use. It is a business asset is an asset used or held ready for use in the production of income, included in the gross income. Yeah, for the year of income. Now, what happens that if you dispose of a business asset and you happen to dispose it off at a gain, that gain would be included in the incomes of that taxable person. In other words, the gain would form part of gross income. Now, here we are saying that any capital gain which is not included in the business income. So the capital gain which is included in business income is that capital gain which relates to business assets. Now the capital gain which is not included in business income is that capital gain which relates to depreciable assets. Last week I told you I would tell you the meaning of depreciable assets later, but I could tell you right now the distinction between a business asset and a depreciable asset. A depreciable asset, for it is plant or machinery, It could be any equipment, any article, okay, which is of course, it is also used in the business. It could be also maybe held ready for use. That means it is not used, but is held ready for what? For use.
For use.
You are writing.
Yes.
Hello?
Doing some work.
Yeah, okay. If you're writing, you
Yes.
can write it. With plant or machinery or any implement, utensil or similar article, which is wholly or partly used or held ready for use. By a person in the production of income included in gross income. And which is likely to lose value because of wear and tear or obsolescence. You are there?
Yes.
So, when you dispose of a depreciable asset, the profit you get on the disposal of that depreciable asset is exempt from tax. Now, by it being exempt from tax, we are saying it would be deducted. Exempt if it had been included, then we shall deduct it when we are computing our chargeable income. The profit on the disposal of a depreciable asset will now become like an allowable deduction.
Yes.
Whereas the capital gains on the shares and disposal of a commercial building, those ones are form part of business income. So the only distinction here is the depreciable asset. So the gain on disposal of a depreciable asset is not part of business income. That gain is exempt from tax. Therefore, we shall deduct it if the accountant had included it in the incomes when we start practicing. Yeah. Then the other component of exempt income is employment income, which is derived by an individual who, to the extent provided for in a technical assistance agreement. So if there is that individual who is coming to provide technical assistance, in most cases, this individual is not a resident of Uganda. Actually, in all cases, not most cases, but all cases. So employment income derived by an individual who is providing technical assistance. So they come up with a technical assistance agreement with this person. This is usually happening with multinational corporations, whereby they bring in expatriates and the expats. Now the matter under contention is how do you tax their incomes? But if there is an agreement that this person is not an employee but is coming as to provide simply technical assistance. So the law is saying that technical assistance income is part of employment income and it will be exempt from tax, meaning it will not be taxed. Pay as you earn will not be charged. So that the condition is the individual must be a non-resident, or he must be a resident solely for the purpose of performing the duties in the agreement. That means the duties of technical assistance in the agreement. And then the minister should have concurred in writing with the tax provisions in the agreement. Yes, so you may come across a question where you have a company, they have someone providing technical assistance to a certain department, the IT, and there is a technical assistance agreement with that staff or that person. So when that is well defined and the person performs the duties in the agreement, the minister has concurred in writing, then all the income to that person, employment income to that person, would be exempt from tax. Then another component of exempt income is a foreign source income, which is derived by short-term residents of Uganda. Yeah. Or a member of an immediate family member of that person. Could be the short-term resident or the family member of that person. Then we have pension. Last week, like we said, pension is always exempt from tax. If you recall that.
Yes, I remember.
Are we together?
Yes.
Then we have lump sum payment made by a resident retirement fund to a member of the fund or dependent of a member of the fund. Then we have the proceeds of life insurance policy.
This one just throw some light, yeah?
On the lump sum payment.
Yes.
Oh, now a lump sum is the money you are getting at once. It is quite a lot. That means it belongs to several periods. Now this is the money which is being paid by the resident retirement fund. A retirement fund is an institution which collects money for savers. People save money in the fund.
Like NSF?
Yes, like NSSF is a retirement fund.
Okay.
Now when they are paying those benefits, NSSF benefits,
they don't tax it.
Exactly.
True.
So that those benefits shall be paid to the owner, the member of that fund, or a dependent of the member. You yourself, you may have died, but then your wife or your children can get the money. So we are saying that money, as of now, those proceeds, that lump sum payment is exempt from income tax.
Yes.
Because a lump sum is a large sum of money which relates to several periods being paid at once. Yeah. Then the other is a life insurance policy proceeds, which are paid by a person carrying on life insurance business. So if the life insurance company happens to pay to pay any person the proceeds in respect of the life insurance cover, we are saying that income would be exempt from tax. If you have a life insurance policy with a life insurance company and you happen to get money from that life insurance company, the proceeds you are getting are exempt from tax.
Yeah.
Now we have this also official employment income of a person employed in the Uganda People's Defense Forces, the Uganda Police Force, the External Security Organization, the Internal Security Organization, Uganda Prisoners Service, and any other those organizations I'm mentioning, it excludes those people who are employed in civil capacity.
Okay, those who are there as civilians.
Correct. Civil capacities as civilians. Of course, they could be in UPDF when they are not
as civilians.
When they are not what? Soldiers. Very good. So those guys are civilians, and therefore their income is taxable.
Even there are some very true.
Pardon?
This is our line. Even if there are doctors who are civilians and work in Bombo hospital, but for them they pay taxes. They pay.
Yes, yeah. Those ones are in civil capacity, so they pay. But the ones who are contributing to the service of this nation, they should not pay. Protecting this nation. So the ISO, the ESO, external security agencies, internal security organization, all exempt, and even the beloved boys of Museveni, Uganda police. Except I don't know about LBUs, they are not mentioned anywhere.
they also under us.
They are under UPDF.
UPDF.
I think they are members of internal security. Something like that. Are they registered under UPDF?
Yes, they are. They are not called auxiliary force. Auxiliary force. Auxiliary is under reserve force.
So that means they are under UPDF.
They are under UPDF.
So whatever little they get is theirs.
It's theirs.
The URI doesn't take any.
It doesn't.
Okay. Next, we have employment income of a person employed as a member of parliament, except salary. Now, what happened is that in 2016, the parliamentarians made an amendment and they said MPs need to start paying tax on salary. And if you recall, there was the MPs made a lot of noise.
Yes.
So nothing to do, salary has to be taxed. But any other allowance is just nyama choma. Next, we have the income of the government of the Republic of Uganda and the government of any other country. Now that one is typically exempt from tax. If even we are saying even the government of any other country, that means even the income of what? The ambassador, the what? How are they called? Those missions. The foreign missions. The embassies.
Diplomats.
Then income of Bank of Uganda is also exempt from tax. The income of a collective investment scheme to the extent to which that income shall be distributed to participants in the collective investment scheme. That one is also exempt from tax. Because members are collecting money for investment purposes. So this one is the provision to encourage investments. Then emoluments payable to employees of the East African Development Bank. That was effective 1st July 1997. So if there are any benefits which are payable to people who worked in the East African Development Bank or who are working as employees in the East African Development Bank, all those payments are exempt from tax. And if you recall, we saw that East African Development Bank is a listed institution, meaning even its income is exempt from tax. Then we have the income of an investor compensation fund. Now that was established by the Capital Markets Authority. The Capital Markets Act. Then we have income of the Deposit Protection Fund. Now, Deposit Protection Fund is under the Financial Institution Act. This one, which is regulating banks and microfinance institutions. There is what we call Deposit Protection Fund. Now, that the income received by the Deposit Protection Fund is exempt from tax.
Mm.
Then income of a person derived from the operation of an aircraft in domestic and international traffic or the leasing of aircraft. Then income of a person derived from the exportation of finished consumer and capital goods for a period of 10 years, where the person, if he is starting a new investment, applies in writing to the commissioner to be issued with a certificate of exemption at the beginning of his or her investment. So we are saying that if you are going to be a taxable person carrying out a business which will lead to exportation of finished consumer and capital goods for a period of 10 years, then that income would be exempt from tax. But you have to apply to URA. If it is an existing investment, then you can also apply for the certificate. Now, if you already started doing the business of exportation of the finished consumer and capital goods, and you then need to prove to URA that you export at least 80% of the goods produced.
Okay.
Then income of a person derived from agro processing. Then we also have the what? Now, when you talk of agro processing, I want to believe you are comfortable with it.
Yes.
Good. Then we have income of a saving and a credit cooperative society. But now, this will end in 2027. Yeah. So it was. Yes?
Can you throw some light here? Income of a circle up to this? Why would
up to 30th June 2027.
Okay. Why would we exempt the income for circle?
Why the income of a circle is exempted?
Yes.
Now, these are government moves. This is what the president is usually talking about in his fiscal and the expenditure. I mean, fiscal and monetary policies. Then, and also in the development agenda, if you look at his the long-term plans for this country. In terms of the development goals, the assessment is that the circles are causing the local communities to pick up in the economic activities. So their assessment, the legislators in their assessment, they saw that by 2020, they gave it 10 years from 2017, 30th June 2017, 1st July 2017, they said if we give the circles 10 years, we believe in this 10 years time they would have picked up. So from when after the 10 years, chances are that they will come back in parliament and even restrict the capital requirements. And then maybe cause the tax implications. Apparently it is exempt from tax. So this amendment has not yet been withdrawn, therefore it remains in force until 2027. So this one, it is just a government move to support the local people who may not access banking services or who might see the modern banking services as expensive. So the government was trying to expand the financial sector. Yes, and also trying to empower the financial sector. Then, if there is any income divided by a person for letting or leasing facilities whose investment capital is at least 50 million US dollars. That is for a foreigner, or 10 million US dollars for Ugandans. So we have several, and for purposes of the exam, you may need to know that on your fingertips at least 5. Just in case a theory question comes and you need to jot there.
True.
Have you been following through with what you have?
Yes, they are all matching.
Do you have any you'd like clarity in your book?
Most of them are self-explanatory. There's one of income of Jagali hydropower up to that June 2022.
Yeah, that I had skipped it erroneously. Yes, it is one of them. Yes. Correct. It is also one of them. Now that is all government plans, development plans. It is now looking at power generation. They want them to take off. But once they take off, you never know, they might tax them.
Okay.
I talked about
network
for any source income of short-term residents. Yeah, now a short-term resident is that resident individual who's not a citizen of Uganda, but is present in Uganda for the period which shall not exceed 2 years. Are we together? In case they asked you to write short notes on the following: short-term residents. A short-term resident is a resident individual other than a citizen of Uganda, present in Uganda for a period not exceeding 2 years.
Okay.
Is that okay?
Okay.
Okay, now we looked at gross income, business income, employment income, property income. And as we continue with the general topic of business income, because we are still looking at business income, whereby we have looked at the components of business income as per section 18, which we did last week. We also looked at now expenses of deriving that income. The generality of the expenses of driving that income. Now I want us to look at the specific allowances or expenses provided for in the Income Tax Act. Specific business allowances under the Income Tax Act.
Okay.
Have they provided them in that book?
Can't see them here. What could be the content?
Yes.
What could be the content there? The content could be what?
We have meals, refreshments, and entertainment expenditure. We have budgets.
Maybe they are.
We have interest, repairs, and minor capital equipment. Still, it should be under the topic of business income or allowable deductions.
I'm seeing here. Also capital expenditure. Not the one. Yes, I'm saying meals, enrichment, amount of pension paid to any person. Yeah, I think they are here, though not in order, but can still go and I'll be seeing them.
All right. So meals and refreshments and entertainment expenditure. It will be allowed as a deduction for business income. In others, to be taken as a business expense. So, now that deduction is allowed for expenditure which is incurred by a person providing meals or refreshments or entertainment in the production of income included in gross income. So that should always be one of the conditions.
Okay.
The refreshments or entertainment should be in the production of income included in gross income. Of course, those meals, refreshment or entertainments, they could be taxed under employment income. That is, if they are not provided on equal basis. If they are provided on equal basis, they will be excluded under employment income.
So you mean under business income, there will be allowable costs?
Expenses, yes. Yeah. So what the law is saying here is that if the employer provides meals or refreshment or entertainment to employees on equal basis, that the meals or refreshments would be exempt on the part of employees when we come to employment income tax. They will be exempt if they are provided to all full-time employees on equal basis. So even if they are exempt, so even if they are exempt, here under business income, they are taken as expenses allowed. So then, if they are not on full-time, if they are not given to all full-time employees on equal basis, that means the meals, refreshments, or entertainment then would be taxed under employment income. The employees would pay as you earn, the fact that they are not on equal basis. That particular employee who is getting a favor would pay the tax thereon. Then still under business income, that particular expense would continue to be allowable or deductible. It will continue to be an expense. Condition is it was incurred in the production of income, which was included in gross income.
Okay.
Or
Get it.
the person's business could include the provision of meals, refreshments, or entertainment, and the person to whom the meals, refreshment, or entertainment have been provided have paid an arm's length consideration for them. So then that would be allowable.
Okay.
Bad debt. Another item is bad debt.
Yes.
Now a bad debt would be allowed as a deduction for that amount which has been written off as a bad debt in the person's accounts during the year of income. But now the condition is that that bad debt is only allowed if the amount of the debt claim was included in the person's gross income in any year of income. So that means that for you to accept this bad debt allowance, that bad debt claim should have been taxed by the fact that it was included in the gross income of a person in any year of income. Any year of income. Not necessarily the current year, any year.
Okay.
And we shall see later that the bad debt would, the commissioner also issued a guideline there that the bad debt should have at least stayed outstanding for at least 2 years. All the reasonable steps to recover have turned futile. So if that is demonstrated, then the bad debt is allowable.
Okay.
So the bad debt could be the amount of money lent out in the ordinary course of business. That is like for a bank, the loans. Yeah.
Okay.
Let's go to interest. Are you comfortable with the interest? First of all, have you understood bad debt?
Yeah, but I'm okay.
So
But I'm fine.
interest is a cost of finance for the business. When you get capital for the business, you are supposed to pay a cost. So if the capital has been acquired in the form of debt, you have introduced the money in the business in the form of debt. The borrowed funds would attract interest, and then the interest expense would then appear as the expense of producing income. So a person is allowed a deduction for interest incurred during the year of income in respect of a debt obligation to the extent that the debt obligation has been incurred by the person in the production of income included in gross income.
Yes.
And that debt obligation may include a swap payment, which would be arising under a swap agreement or shares in a building society. So ordinarily, the whole interest is allowable. Ordinarily. However, as we shall see ahead, because of tax avoidance, which taxable persons tend to practice, then the legislators come up with the capping of certain expenditures or allowances. Did we look at tax avoidance?
No, we didn't look at it. No, we didn't look at it.
Tax avoidance and tax evasion.
Avoidance is when you use the legal means to avoid tax.
To pay reduced tax or avoid the payment of tax.
Using legal means.
Taking advantage of the loopholes in the tax laws and the tax provisions, the legal provisions. So the deductible interest or the allowable interest in respect of all debts, not bad debts, sorry. In respect of all debts, the interest in respect of all debts which are owed by the taxpayer who is a member of a group other than a financial institution or a person carrying on insurance. I'm saying the interest allowance owed by a taxpayer who is a member of a group other than a financial institution or a person carrying on insurance business shall not exceed 30% of the tax earnings before interest, tax, depreciation, and amortization. Now that is the capping I was telling you about. What happens that if the particular taxpayer who is a member of a group companies, a group we are referring to a group of companies, and then a member of that group has given a loan to the taxable person or this company in Uganda. Now this company would start paying interest, assuming the person, the company which gave out the loan to the company in Uganda is, let's say, in the UK or India. So you would realize that the company in Uganda would be shifting the income earned in Uganda to India or UK in the form of interest payment. So as a means of protecting our economy, now the investors in Uganda who wish to take away money from Uganda in the form of interest payments, as they are paying their related party, the legislators decided to introduce a law known as capping of the interest payment for the debt in the group. And we are saying that that interest shall not exceed 30% of the tax earnings before interest, tax, depreciation, and amortization. Some people call it EBITDA. That is the EBITDA. EBITDA. So the interest allowed shall not exceed the 30% of the tax earnings before interest, tax, depreciation, and amortization for a group. Now, what happens here is that if you are faced with the group company, you will get the chargeable income before the interest, then you would add back the tax depreciation and add back the amortization. Compute 30% of what you get, compare with the interest in the question. If there is an excess, then the excess will then be taxed. Yes. So that means it is only 30% which is allowed.
Okay.
Yeah. So what would happen here is that if you have the interest paid in a group, what one would probably do is maybe to add back the whole interest as is. After adding back the whole interest as is, get the chargeable income. After getting the yes, after getting the chargeable income, then you would add back depreciation and any amortization. Depreciation, we are talking about tax depreciation. I'm going to explain tax depreciation. I don't know whether it will be possible today or we do that next on Tuesday. Yeah, we shall do that. Yes, tax depreciation. So after adding back tax depreciation and the amortization, the answer you get multiplied by 30%. Compared with what you have added back already, that the interest in the question. If the interest in the question is more than the 30%, then you would bring the 30% below. Yes. Then if it so happens that the interest you added back is actually less than the 30%, then you would still deduct it to make an offset to show that you have done nothing. You are okay with the deduction of the interest because it is within the 30%. Yeah, you add back and also deduct the same amount. Yeah.
Correct.
The other is repairs and minor capital equipment. Now, a person is allowed a deduction for expenditure incurred during the year of income for the repair of property occupied or used by the person in the production of income included in gross income. And that deduction of expenditure incurred during the year of income in acquiring a depreciable asset other than returnable containers whose cost base is less than 1 million. Yeah.
I recalled asking you this last time, eh?
Yeah, I think you are now okay with it.
I'm not okay.
But the condition is that asset should be able to function in its own right. It should
Be independent.
Yes. It shouldn't be that individual item which forms part of the set. Like a mouse, a mouse cannot function on its own. A decoder, can a decoder function on its own? A DSTV dish. Hello, are you there? Hello? Hello, David, you are off. David, you are off. Yes, David.
Yes.
You had gone off.
Network is disturbing.
Yeah. Maybe we can conclude. And then you will go through what we have studied today. Exempt income, those expenses. So when we meet on Tuesday,
Yes.
we shall go through others. We shall complete those specific allowable deductions under the Income Tax Act. And then after we are done with that, we would also look at least some example. I will choose a number in the past paper, which we shall try out together. Yeah. Tuesday, I hope you will be available.
Yeah, very much.
You are in Kampala?
I'm not Kampala.
Okay.
But tomorrow I'll be moving early morning. Tomorrow I'll travel early morning. There's some work to finish.
Yeah, we are not bad enough. When we move with this speed, by end of August, we shall be done with everything, and we might be in revision by that time. And if the president happens to extend a few weeks again, the exams might be in October or November or December. But the preparation must continue. You do not have to reduce the gear.
Yeah, true.
Yeah. So keep the fire burning. The time they say now come for the exam, you have no pressure. You are just ready, you go and write when everything is on your fingertips.
True.
Yeah. Okay, David.
If they
yes.
If they happen to extend, I think you also do another paper over MDC. How is it?
No, what about you do chuti? You do chuti first.
Chuti.
You first clear chuti.
Thank you a lot.
Yes. because there are some components in MDC which are in QT. Yes, like probability. Probability, some issues to do with the linear programming. You might find them in MDC. So to do MDC, you need to first do QT. Although they can allow you, but you may not be comfortable.
Okay.
So I'm going to talk to Martin. I don't know how, he was preparing for a function. He got busy. Then he also had a master's to clear. Now they are on hold. But what is tricky with the QT, it is hard to make an online session for QT. Quantitative techniques. I don't know, maybe if there is a possible relaxation in the movement.
I can be moving depending on the time schedules. I'll first check.
But what I know, he stays at around, I think, near Zana. Can you travel to there, Entebbe Road?
That is the Entebbe Road. I need to look at my timetable.
Yeah, actually, for you, if you can get a day, you can give him a day. Because now for him, he's definitely available. Well, I don't know how their program would be. I'll talk to him whether he's among the 10%. Yeah.
Okay.
So you will also review your schedule and identify the day you can meet him. But I think now on our part we can continue with the Tuesday and Thursday, Saturday. Same time.
First part is okay.
All right.
No problem.
Okay. Hopefully you are keeping safe.
I'm safe now, though. I just have small fever disturbing me.
You are you're on the front line.
I tell you.
This is a real war.
We have big exposure to people. Man, this is a real war now.
Yeah.
And tomorrow I have to get early morning by 5. I need to moving with the bus.
You're going to where? Northern Uganda?
Lubombo, back to work.
Okay.
To work.
Yeah.
Yes.
All right. You rest. You have enough rest. So that you can travel safely. Yeah. Good night. You keep going through what you have studied.
Thank you very much. Good night.
Bye.